Okay, I think we've waited long enough. They're late, they're late. Cool. All right, folks, welcome to our members Q&A session, and probably the last one that we're going to be doing for the year. It's now being December, of course. So I hope you've come prepared with questions that you would like to ask me. If I can ask you to just pop them into the chat box as always, and I will respond from there. And we can get started. So while you do that, and please do pop those questions into the chat box. I just wanted to also point out that we've probably got only another week or two left of real trading in the year, certainly in terms of what I consider to be the trading year. It is a little bit controversial, has been in the past, but I honestly recommend to everybody, I always have done, that you suspend trading, particularly between New Year, well, Christmas and New Year. Specifically, what I recommend is that you suspend trading on the Friday before Christmas, so effectively the weekend before Christmas, and only start again on the Monday after New Year. So during that gap, typically we find that liquidity drops off quite dramatically in the market. Obviously, there is still trading going on, but a very important risk management, I wouldn't even call it a technique, it's just an absolute that we always look at, is avoiding low liquidity periods, low liquidity instruments, you name it. So please do bear that in mind. We are coming up towards the end of our trading year, and it's good to take a break as well. I also just want to point out that our internet again is a little bit unstable today. We've had some really stormy weather down here on the southern coast, lots of thunder and lightning, and I'm seeing a little bit of instability in our connection again. So if we do get interrupted, I apologize, and B, just hold on to see, wait for the reconnection. If there is no reconnection after about 5 minutes, then we'll need to reschedule. So I'm hoping that won't happen, of course. All right, so I'm still waiting for questions to pop into the chat box, folks. Please remember, this is a Q&A session. And in order for me to answer a question, I do need to have a question. So I will wait for you on that. All right, so Dean is asking, he's experienced some good success with a trade manager, but of late it seems a bit lethargic. There's some trades I thought would be taken that did not end up happening. And what would the causes of that potentially be? All right, so great question, thank you. Now, the one thing obviously that the trade manager looks to do is take care of some of the execution time frame criteria for you. So particularly on the H4 impulse, you obviously can't be there every 4 hours to double check to see if, for instance, there is an impulse candle. So that's an obvious one, you know all about the impulse candle, but from the training, you should also be aware that we look for things like a valid pullback. Other things are we have a maximum threshold for the spread impact. So if the spread impact is too high, which obviously would typically happen around rollover, or perhaps for some other reason, then again, the trade manager won't take that trade. It also has a window, and we can adjust that window as well, but there's a default window of 10 minutes after the start of a candle on the H4 impulse in particular, to assess whether it can take a trade or not. So generally, obviously, 10 minutes is going to be more than enough. It shouldn't take more than about 20 seconds to assess all the instruments and take all of the trades that were available. So that's just an additional safety feature that I've got built in, probably completely unnecessary, but I like to just make sure. So that would be some of the reasons, but apart from that, I mean, I must admit I've had plenty of activity on the trade manager. We need to, okay, we can have a look at an example. USD CAD for this week. Excuse me. Let's go and have a check on that. USD CAD, can you give me a specific time, a day and time that you were looking at? We've got some other folks here this evening who are also using the trade manager. And I assume you guys have got the latest version that we distributed on the weekend. Okay, from the start of this week. So, right, let me put in a vertical line. That should be it. Yeah, okay, so that would be Monday. So obviously on Friday, as Dean's pointing out, we had a valid trend and reason to believe that we're in an impulse wave. In fact, it's definitely an impulse wave with that candle on Friday being a very strong bullish impulse candle and also giving us an impulse wave. So no question about that. So all of that was quite valid, which means we can now drop down to the H4 timeframe and start looking from there. One of the other things that we do have, Dean, is well, first of all, let me just give some context to this. You know already that if the reward to risk ratio for the fractal stop is more than 1.5 to 1, then we use the ATR setting, and just to make sure that we've got a minimum 1.5 to 1 reward to risk ratio. So your take profit being 1 ATR on the, in this case, daily time frame, your selection time frame, we would be looking at about 0.65, 0.66 of that ATR for the stop distance. However, that being said, if it's more than the actual daily ATR from entry to fractal stop, it won't take it at all. So we found that the expectancy drops well below 1 to 1 on that. All right, so however, having a look at this, you would probably ask me, would the trade not have been taken at 8 p.m. At the start of the 8 p.m. candle with the close of this bullish impulse candle? Let's look at that 45 pips. I would have thought that would have been taken on that. So let me just quickly double check this as well. Yep, I would have certainly thought that that would have been okay. We've got a valid pullback candle over here, giving us 2 points there. So I don't think there's anything wrong with that. Another thing to point out, though, is you've also got your settings, as we mentioned in previous training, with the app update that we sent out. It's a month ago now, I think, this update, where we're looking at valid classes. So this is a class 3 setup. So obviously as a W pattern, it's a class 3 W pattern with our X to A to B to, well, C close over here, and that would be D. So this is definitely a class 3 setup. So if you have your app set to only class 1 and class 2, it wouldn't take that. So you need to just double check what you've got there on your settings. So you'll notice where it has the pattern class option in the trade manager. You just need to double check what that looks like, and if there's obviously the guidance in there that will tell you what each of those settings means. I would have thought that this looks fine to me in every respect. I can't see anything preventing a trade from having been taken there, unless you only had it set to class 1 and class 2. So just double check that. So there's that one. This over here, if you hadn't taken that, would it have taken this? This is looking like a very long extended impulse candle. Might have done. Let's have a look at this, because this looks more like it would have been class 2. So assuming that candle is not too extended and none of the other issues, as I mentioned, have shown themselves, such as spread impact and what have you. If you want to give the trade manager more leeway in terms of taking trades, then you need to make those settings obviously wider. So we've got by default the spread impact setting, and you can change it by strategy, is on 5%. So check that out and see if maybe you want to widen that, and that may well help as well. So it's obviously broker dependent. So just check that out. Start of the week. Yeah, so I would have thought you should have got at least, one or two of those. Even the setup over here looks valid to me, particularly because this is a class 1 W pattern. So the candle that's just closed, assuming you're not already in a trade, obviously, and I'm assuming from what you said that you're not, that should have taken a trade there as well. So Dean, again, the issue that you and I have is that you're using a VPS that I can't access. So unfortunately, I can't check it any further than that. But have a look at those. Have a look at your settings and see if that makes any difference there. Also, another thing to point out, folks, remember that we're going into non-farm payroll tomorrow. So just beware of that. Cool. Surprise. Weekly market review. Yes, absolutely. I will keep doing the Monday morning or the Monday market review next week and the week after, for sure. But if you're talking about Christmas week and so on, no, I'm having a break, as should you. Right. Thank you for those questions. Yeah, okay, Dean, check on those settings and see how you go. Cool. I've had some feedback from some of the folks who are on the mentoring program with a new update sent through. I think Pumlani mentioned that it was working like a well-oiled machine this week. So it should be fine. It certainly should be fine. But the latest update has got a few improvements to the algorithm as well for certainly for the daily impulse, but across the board really. So yeah, check that out. Right, any other questions? Just a quick note on the trade managers. It's also a benchmark for the H4 impulse. Well, sort of work that I was doing last month on improving the algorithm within the trade manager. I did tinker a little bit, but we had, as of last week, the end of last week, just over 10% return. If you're risking 1% per trade, the H4 impulse produced just over 10% for the month of November. So yeah, I mean, it was, as I say, I don't think it even took all of the trades that it should have. I'm sure I missed quite a few trades, winners and losers, but overall, as you know, it works out profitable. So it might even have been, if you've got absolutely every trade during November, the calendar month from the 1st to the 30th, then you should certainly have got 10% or even a bit more just on the H4 impulse. Dean's asking, is the hybrid strategy available yet? Well, it is. The thing with the hybrid strategy is that although the trade manager, it'll work, it is a very convex strategy. So what does that mean? It means it's a very advanced strategy. And that's not because it's technically complicated. It's not. It's because it has a higher proportion of losers. So on the hybrid, we'd expect to win over the long term at most 1 out of 3 trades. H4 impulse long term is more like 40 to 45% of the trades. Hybrid is probably around 30%, but it's definitely it's obviously got a much bigger. It stands to have much bigger winners. I mean, really, really big winners. It uses quite a bit more leverage because it often gets in on with really tight stops. So you can, when you get a big one, it can be 10 to 1 and even way more than that. So it's great when that happens, but we never know. Obviously, we never know when we're going to get the winners. So you might need to go through quite a long period of bleeding with the hybrid before you get those big winners. So I think last week, Richard was trading the hybrid, got some nice ones for sure. But also with the turnaround this week, anyone using advanced targeting got stopped out quite solidly with the very sudden market reversal we had this week. So yeah, I don't think the full potential was realized, but there were some pretty good winners. So in any case, the hybrid is available, but we probably just need to spend a bit of time on training for that as well, particularly when it comes to your selection time frame. Obviously, that's the biggie, and I'm happy to jump into that with you guys in the new year. But again, I would not recommend that anyone trades that until you are really comfortable with the standard impulse strategies. So if you want me to talk about that more, Dean, let me know. Right, Jürgen's asking, here on the USD CAD, the last setup on H4 execution time frame. I'm worried that we have a valid W on execution time frame when we have an impulse. Good question, Jürgen. This is something that is it's part of the advanced training. You don't have to worry about this, but if you want to take your understanding of the strategies further, then if you've done the WM pattern training in the advanced section of the technical analysis side of things, then you will know that they are very, very useful. So it helps to understand more about what's going on here. So we had quite an extended discussion on Saturday with the mentoring group around looking at looking for information content in the last couple of, or 1, 2, 3 candles on the selection time frame. So in this case, we would be looking at the daily. And the point that I made was, well, if you know how to read the lower time frame, then the selection time frame for that particular purpose, which is only the last couple of candles, is not that important anymore. It really isn't, because a candle is simply a summary of the lower time frame price action, which of course, as you know, is defined as the two sides of price action being support and resistance and cyclicity, which forms as price interacts with support and resistance. So those price patterns are summarized on the higher time frame. So with the candlestick pattern. So why would that be important? Well, the class 1, class 2, and class 3 provide us with information content. They're telling us something about the directional bias of the market, whether it's there or not. Also, in terms of reversals, I mean, there's all sorts of areas where we can use that. The basic side of it that you guys have heard from me many times is looking for different types of reversal patterns, where it just looks like phase 2, phase 2, phase 1, phase 1. Where you have a breakdown and sequentiality of cyclicity. Well, I mean, if you just consider this to be phase 1, phase 2, phase 1, phase 2, and then phase 2, that led, and another phase 2, that led to a class 3 W pattern. Yep. So that's useful information, particularly with that impulse candle, because it's basically like a continuation pattern for the previous trend. Now, and that kind of did happen in a weak way over here. Whereas when you look at this, and the W pattern is a bit of a weak, I beg your pardon, the class 3 pattern is a bit of a weak continuation, because it could still trend. But when you get a class 1 pattern, as we have here, that's much stronger. And in fact, represents a strong trend. And you'll remember that from the previous training, where a strong trend is where the second phase 2 does not overlap with the previous phase 2 wave. So this wave's price territory, particularly the close, does not overlap with this wave, which means that was resistance, now support level is fully respected. If that had come down a bit further, well, that would be a class 2 pattern. But also, you'd notice that that's now a weak trend. And these are things that you're very familiar with. It's just a more scientific way, I suppose, way of classifying these things, so it becomes very clear. Now, especially when it comes to programming this stuff, it has to be extremely clear for a computer to understand. So the question then is, why do you have to worry about these? Well, you don't have to. Okay, as you point out, with the basic form of the strategy, all you're looking for is an impulse candle following a valid pullback. That is also part of the training. But this over here is a valid pullback candle on its own. So for sure, I mean, why look for anything else? Well, you don't have to. You don't have to. And the trade manager, in fact, has the settings where you can tell it to ignore the WM patterns altogether on the execution time frame. Or you can be a little bit more conservative and say, look, we want to have class 1, 2, or 3 patterns only, which is a tad more conservative, because you could have an impulse candle in a class 4. Very unlikely that your higher time frame selection criteria would be met. That is true, because that is much more likely to be an aggressive hybrid setup. But if you're looking at the impulse strategy, you could certainly get a class 3 pattern setup like we had here. But a class 1 pattern is much more aggressive, if you like, and a class 2 in between. So if you wanted to be really, really conservative, you'd say class 1 patterns only. I don't recommend that. I really don't. There's no point in excluding class 2s. Class 1 and class 2 is still pretty conservative. Class 1, class 2, class 3 is more aggressive, but I still think it's worth it. I don't think that one should exclude class 3 patterns at all. The natural instinct that we have to try and avoid losers is an enemy of ours. We don't want that. And that's what a lot of people then default to with these settings, is to use them to try and avoid losing trades, which is a pointless and expensive exercise. Professional traders, you'll remember, make sure they don't miss the winners. With a convex strategy, that is always the priority. So I hope that answers that question, Jürgen. Dean, excellent. That's good. Right, I hope that answers all of that. Anyone else? Anything else? You're welcome. So just expanding on that quickly, if you got any other questions, please do type them in. But the trade manager, obviously, I'm with each update trying to give you guys a little bit more control over the settings. And that was one, as I say, that came out, I think, at the beginning of November, where you've got more control over those settings. But remember that you've got to have a good reason for your overall group of settings. Again, in the mentoring program, we talk about the risk continuum, and it's also always about how aggressive to how conservative you are. As an example, where you're looking at the selection time frame, you could restrict yourself to only having class 1 WM patterns with C close outside of the HDC channel. That's very conservative. Class 1 WM patterns only with C close outside of the HDC channel. That is like the most conservative across the board. Or you could say, well, I will trade all class 1 patterns and I will trade all breakouts of HDC channels. That's kind of the most aggressive, basically, because you're not even combining them. If you're saying class 1 patterns only with C close outside HDC channel, you're combining WM patterns and HDC channels, and you're using the strictest set of criteria there. And you will get far fewer trades that way. But it will also mean that your equity curve is smoother. It'll be shallower. It'll take longer for things to happen, but it'll be smoother. Now, what some people do is say, okay, well, I want to tweak that a bit, and if they want to keep it on a conservative setting there, but then they will go and up their position sizing and use bigger position sizes for their trades. Whereas you could do it exactly the opposite way. Say, well, I want to get a lot more trades, and you go with one of the more aggressive settings on selection time frame, and also even on execution time frame. But then you use a much smaller position size. So the impact on your account of any individual trade will obviously then be much lower, but you've got more trades. And there's an argument for both sides of those. As long as you are not using something where it's introducing, or it's reducing the effectiveness of your edge. That's always important. We remember the 3 pillars. We need to have an edge, and certainly for our core strategies, it needs to be a convex edge. But obviously, there are certain things that you could do that will reduce the effectiveness of your edge altogether. And we obviously, that kind of thing you want to exclude altogether. So I hope that a little bit of elaboration helps there as well. All right, folks, I'm not seeing any more questions popping up. Anyone else? All happy? Seems like we're going to have a quick call today. Haven't had much of a turnout today. Cool. Thanks, Dean, for your participation. Surprise asking, do we have a valid H for impulse in GBP USD? So it's yesterday. Because I guess you're looking at the bearish engulfing. So let me just update this. Crazy activity, obviously. So, all right, bearish engulfing. Everything else is good, obviously, from a selection time frame point of view. Let me just put that there. And you're looking at PM now. All right. So well, no, because that's not an impulse candle. Remember, if you're looking at trade execution at 8 p.m., or are you talking about the close of that candle, which then would be midnight? Well, that's not an impulse candle even on H4 because it's not lower than, I was almost very close. Then you'd be looking at that. So 2 possibilities. That's quite a stretch there. Also midnight, it's rollover. What are your settings for spread impact? If you've got a low spread impact, then I think that you possibly would have not had that would have been a definite reason for that. So valid pullback, yep, no problem with that. Definitely had a valid pullback. So that would, I think, be the main possibility. And obviously the other thing just to note is it is no, that should be fine in terms of the classification. Yeah, so it should be a class 2, yeah. So that would be the main thing. Obviously, if you're talking about the close of that candle, that would mean around midnight. I would think it's the main reason would be the time and therefore the spread at that time. Everything else looks fine to me. Very choppy market conditions. Also, the other thing, of course, is if you've got the trade manager set to not trade non-farm payroll, it stops looking to trade the day before, which would mean today. That would be another reason if you have that set. All good. Any other questions? Been quite a crazy week, no question about that. And this is, of course, just goes to prove why it's so important to put risk management first, because I'm sure you guys recognize and have recognized that quite a few traders lost their shirts this week because they basically went all in on the new COVID announcement, whatever this thing's called, the moronic version, and it just turned around. I mean, if we look at the original COVID announcement last year and how that went, it was an incredibly profitable time. It was really one of the most profitable periods we've had for a long time, and certainly we haven't seen anything quite like that since. Those sort of events don't come along every day. But you know, when if you now expecting the same thing to happen again and kind of predicting it and you overload your position sizes and don't recognize correlation risk and so on, then you could get into a lot of trouble in a week like this week where everything just reversed on us. Hey, Greg. Greg wants me to remind you guys about the 55. Well, I use EMA. I don't really care about the SMA. Yeah, happy to do that. It's just something I observed, and I have incorporated this into strategies in the past. Okay, so anybody who did a course of mine in like 2012, 2013, somewhere around there, would remember the what did I call it? It's just escaped me for the moment. Oh man. Anyway, it's basically looking at the 55 EMA on the 1 hour time frame. So the observation is simply this, and you can use it or lose it, is that a phase 2 on the next higher time frame will typically come to an end, will often come to an end at or around the 55 EMA on the lower time frame. So this is the H4, and you can see this is the 55 EMA here, and I think it is. Let's just make sure. Could be. Yes, it is. So a phase 2 on daily, which this basically was here. Let me just point out that that's the end of it, so we can go up to daily quickly. There you have it. So there's the phase 2 on daily. Did it come to an end at or around the 55 EMA on the H4? Well, absolutely it did. There you can see it. That's pretty much all there is to it, Greg. It's just a very valuable dynamic level of support and resistance I've generally found. So if you find it coming to an end like here on daily, you'd say, well, that would be the end of a phase 2 on weekly. Now, the one thing I must say to that, of course, is that you would need to have reason to believe that you're in a trend for that to be the case. If you're not in a trend, you would expect then for price to not respect that support and resistance level. It would be mushy. It would tend to just move through it and around it. So yeah, that's pretty much it. So if we just look at this generally as well, and you can see, look at that, bam, 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 bam. Without even having looked at that for quite some time, there you have it. You can see quite clearly that it did exactly that in trending markets, and even going a little bit further back, you can see it there and there and there. Remember, none of these are for prediction at all. You can build strategies around these things, but we actually never know what's going to happen next. So good. Thank you for that. Anyone else? Cool. Right. Well, in that case, folks, I would once again just remind you, tomorrow non-farms, I have found, well, this is the second month in a row. The week leading up to non-farms in November was also loss-making. This week has been a loss-making week. In November, first week was loss-making, second week was profitable, third week was loss-making, fourth week was fourth week? Yeah, I think so, profitable. In other words, last week, and then now this week, obviously not great. But we still definitely, from the beginning of November, are well up just on H4 impulse. So again, goes to show that despite the fact that we lost significantly more of the trades in November than what we won, we made a fair chunk of cash. So it was a pretty decent month overall, if not an easy one. It wasn't easy, but it was at least profitable. We've had more difficult months. October was much more difficult than November. So yeah, I mean, it's not been an easy year generally either. But these are the times where I find where people who are learning to trade and they learn how to hone their skills in these types of environments and can get through the frustration of it tend to make the best traders by far. Anyone who learns when times are easy never gets to polish their skills against the whetstone of adversity. So, folks, I see there's no more questions. Everyone happy? All good? Jürgen's asking, was this mostly on H4I, hybrid, overlay, combination? If you're just talking about that profitability, I'm just talking about H4 only. I was doing a lot of additional testing on that, especially trying, just working on the algorithm for that, for the trade manager, and also fully automated version of that as well. But yeah, that's certainly the case. But also just chatting to Richard, so Greg and Chris, who are here, will know more about it, and Ingrid will back me up when they've heard from Richard, who was trading a hybrid last month, that he did well on that, for sure. That's on the hybrid. Overlay, I've neglected a little bit, but also just running through it casually the last couple of weeks, the overlay has done its job. You must remember the overlay is not specifically designed to be profitable. It's designed to smooth out the equity curve overall. So it helps to reduce the size of the drawdowns without reducing overall profitability. And making the same money for less risk is just as valuable as making more money for the same risk. And in fact, you could adjust that just by changing position sizes. So H4 on its own, H4 Impulse on its own did well. If you add in the others, you'd have probably done better. No doubt about it. But it's good to isolate these the individual strategies. All right. Good. All right, folks. I hope that's been useful. As always, if you've got any questions for me on anything at any time, as members, you've got the group, the Facebook group. Pop a question in there. I get a notification. So just drop it in there. I'd appreciate it if you do it there. Unless you're having technical issues, something like that, then that's different. Then send us an email at support@GPT Academy. And if Karine obviously can't help you, she immediately sends it to me. Richard's also assisting with all of this. Please do that. But if it's a trading question, then feel free to use the Facebook group, the member Facebook group, and of course there is also the functionality within the academy itself, underneath each and every lesson, for you to ask questions that you need to, and I'll also get notified of those. So I will answer those as soon as I see them. All right. Okay, folks. Well, that's it from me then. Seeing as there's no more questions for this evening. Remember, tomorrow is non-farms. Once again, we're also leading up to the end of the year, so time to have a bit of a break. But we will be doing the next 2 weeks, the market review for the next 2 weeks. And then we will be hanging up our spikes and start again in the new year, all fresh. Super, folks. Enjoy your evening further, and I'll chat to you all soon. Bye for now.